Hey, greetings to everyone who is watching. Now, this looks a little different. Usually it's Brian Feroldi and myself, but you don't get to see him. We couldn't find another Brian, but you notice that my friend who's here with us today, Justin Lamb, sports the same hairdo as Brian Feroldi. So we've got that going for us. And today we are going to have a talk about AI, about software as a service, about Mythos. Is that right? Mythos? Have you heard
I've
it?
heard mythos. I've heard for the Greeks it's mythos, and for everyone else it's mythos.
Okay. All right. So we are going to talk about all those things today, and we're going to talk about what it all means. And we're going to talk about it with my go-to source for things like this, Justin Lamb. So Justin, I think it's only fair that we ask people, or we ask you to just identify yourself. Let us know what you do professionally, why I would choose you as the person, because you are the person I go to about stuff like this.
Well, that's very kind. For me, it's let's see. Started out actually learning financials from you guys.
Mm-hmm.
And then I enjoyed hanging out so much, I stayed. And then now I'm working with you on the developing end of Stock Simplifier, as
Mm-hmm.
well as helping with the community. And for the AI side, I really just wanted to organize my own work. I also have my own company and just a lot of moving pieces. So I first started out just trying to use AI as a solopreneur, trying to organize everything that I was doing.
Mm-hmm.
And then, as I've told you and everyone else, I think the best way to understand AI is to build with it. And until you build with it, you can kind of understand things, but you just don't understand it. So you
So
have to use it.
let's put it in perspective a little bit. So you're a solopreneur, I believe, a business related to photography. Is that right?
No, actually, that's a side hobby.
Oh, okay, okay,
My business actually is manufacturing switches for ride-on toy cars. A very
okay.
niche industry. Three to
That's
5 year olds drive in. Been doing that almost my whole life.
that is very niche. So are we talking, so before 20, is it Thanksgiving 2022 when ChatGPT was released, or 2023? I can't remember. But before
22 or
that,
23. Yeah.
was AI something you spent much time on before that?
No, always been a computer guy, a tech guy, more
Okay.
so, but never. I'm not one of those AI researchers that have been doing this since 2013, 2014 range.
Okay. So then over, let's call it the past 3 years, you've really dove in deep, and it started as a way to help improve your business and has kind of snowballed since then. Is that fair?
Oh yeah. I mean, I think the lines in the sand would be I used it when ChatGPT 3 came out.
Mm-hmm.
And then I did everything like everyone else has. Oh, it can make a picture. Oh, it can do this. It can write an email. It can do the little baby steps.
Mm-hmm.
And then fast forward to last year, and all of a sudden I said, wait a minute, this audio thing is a thing. And that's when I got the microphone, I got the transcription software, and all of a sudden everything started changing. And I would say the biggest step function change was Christmas 2025.
So
From
like five,
December,
6 months ago.
yeah, from the beginning of December to January, the way that I used AI completely changed because it was
Because
like it woke up. It was kind of
was
like
it something inside of you, or was it a new tool?
it was a new functionality
Okay.
of capability.
Okay. Now, speaking of that functionality, capability, Tom's talking about how much he's looking forward to Stock Simplifier. I just want to show folks, because Justin, you've built this, right? This is your baby right here. Now, we have a waiting list that people can go to if they want to join the waiting list. But you know, this is something where, put in the company that's at the forefront of all this, like NVIDIA, and you built this where we can go through NVIDIA and you tell us about the business, the phase, the moat, its growth, the management, the risk, the valuation, all of these things. Like you built this whole thing that we have yet to release to the investing community writ large, but you did all of it using these tools.
Yeah.
All right. So you are an active practitioner of these tools. Beforehand, we were talking about whether or not we should call you a vibe coder or not, because it's taken on a bit of a negative connotation. But you build with AI.
Yes. I
And
would not classify myself as the archetype coder,
mhm.
and I would side more with just you find problems and you solve them, or
Mhm.
you have an idea and you build it.
Okay.
That's I much more go along that line, because I think that especially with the software community, a lot of coders are getting into the scenario where they identify as a software engineer, and then they
Got it.
can't expand past that. And AI really allows you to complement all of your strengths and then lift up your weaknesses to make you really a full stack engineer, I think is what people would call it.
So one thing I want to point out about Justin, because some people might be looking at this and might be asking themselves, okay, well, how is this going to help me investing?
Mhm.
Because I come here to this channel for investing. Um, one thing that I want to point out is that you, in our investing community, you have been talking for quite some time about how AI was going to really change things up in the world of software as a service. In fact, we had a community event in August 2025, right? August 2025, where you talked about, guys, software as a service could be in some trouble here. And I remember the software as a service is a huge part of my own outperformance from about 2016 until around when you told us we should be paying attention to that. And I listened, but I didn't listen that hard. I just, to put all of this kind of in perspective, I just want to show people what's happened to software as a service. Now, right here, this is year to date. Oracle just down 6%. This is Microsoft down 13%. Salesforce 28%. Adobe 30%. ServiceNow down 33%. Intuit down 37%. And boy, we could even add in companies like Atlassian, and that's, I think, probably down even more. Yeah, I mean, look at Atlassian down here. At one point, Atlassian this year was down 64%. So you were ahead of the curve on this. And that's one of the reasons I want to have you on, because we're talking about something that does affect a lot of investors. But the other thing that I want to point out is when it comes to Mythos, this was something that came out. I want to show you something that popped up in my inbox. And this is something that I use a whole bunch. This is called the 1440. And they have these really helpful, just kind of condensing the news. And what I want to show you here is this came in 2 days ago. It says that Anthropic CEO was meeting with the White House Chief of Staff to discuss government access to Mythos, an AI model designed to detect cybersecurity vulnerabilities. Now, I have a feeling that you have an opinion about that highlighted area right there. Mythos, an AI model designed to detect cybersecurity vulnerabilities. Tell me what Mythos is, and then tell me what people are getting wrong about it.
Yeah, I mean, first I want to say the first part is I don't know. And 99.9% of people also don't know, because it's not a publicly released model. That's what everybody just has to remember. So there's a lot of narrative around there, because there's a lot of aspects that people just don't know. So they're making things up and they're connecting dots.
Mm-hmm.
Mythos really just is, if as long as we take Anthropic's word at it at face value, it is a new version of model that is a step function improvement in from Opus 4.5 to Mythos, if you just compare the benchmarks, they are a similar improvement of Opus, or I'd say more people will probably be familiar with ChatGPT 4.0 when that first got released in 24, 25 range. From ChatGPT 4.0 to Opus 4.6 or ChatGPT 5.4, that is that same amount of difference is the difference between Opus 4.6 to Mythos. And that improvement came out in about 2 months of time. So that is a drastic improvement.
So Opus 4.7 was just released. And for those that don't know, it's just like the newest version of Claude. But way over here on the right, we don't have a chance to play with this tool, right? But others have. And you can see that it does better on agentic coding versus different benchmarks, terminal coding, multidisciplinary reasoning, and so on and so forth, all the way down. Kind of, if you were trying to explain this to someone in layman's terms, what does this mean?
Yes, this is something that's really misunderstood by a lot of people. People look at the benchmarks and, you just assume 100% is the top and 0% is empty. So you kind of equate it to a battery charge. 1% is 1%. These are more like IQ. So as you get up to the top, the difference between 60% and 61% is not the same as 80% and 81%. As you're getting closer to 100%, it is so much more difficult to go up an additional 1%, 2%, 3%. So as we were seeing it going from 60 some percent to 90%, those types of jumps, that's not normal. Like there's nothing normal about that. And to maybe equate it to more an understanding would be you went from high school and you skipped college and went straight to the top of the class in the masters, and then you got the Nobel Prize. Like, there is a different level of intelligence going on that is not a small gap. It's a very large gap.
Okay. So I want to mention to everyone watching on YouTube, that's watching on X, wherever you are, if you have questions for Justin and what this means for investing, please put it in the chat and we will be taking your questions and we can ask Justin those questions. All right. So a lot of people are talking about cybersecurity because we saw cybersecurity firms just drop off a cliff when they released kind of their findings with Mythos, when Anthropic did. Is that because Mythos found a whole bunch of vulnerabilities that existed in a lot of systems throughout the digital world? But I think that's taking the wrong. Didn't it just kind of do this somewhat on its own? Like, how do you explain it?
From the way that I've understood it, and there was an interview with one of the Anthropic people, Felix, that I would suggest people to listen to. But it's one of those situations where every new model, it has a different personality. And it's up to the user to truly understand what type of personality that is, because you want to be able to use it to your benefit. It's kind of like when you meet someone, what are they good at? And I like to say, if you hire someone, all right, this is the job description, but now what specifically are you good at? And maybe what are you not so good at? And the way that I understand Mythos is you take a look at all of the tasks that they're doing and they're running it through all of these evals. And it just so happens that it is really good at finding bugs. It's not that it was designed for bugs. During the training set, it's designed more of a general model, but it just so happened to be really good at finding bugs because it was a really good coder. And that's kind of where I think a lot of people rush to jump to conclusions, but until everyone can test it, I say you just trust them at their word, because Anthropic as a business, they were founded on safety. And if it is taken at face value, and if it is what it's suggested to be, you want them to take that a little bit slower.
Now I see we got our first question came in from Floormat, and I'm going to get to this question in just a minute. But first, I want to talk about something else. It just left my mind. Well, you know what? It left my mind. When it comes back, I'll get to it. But so let's take this question. The Claude models are being used by software companies to enhance what they've already built. So one of the big narratives out there about SaaS and is SaaS in trouble is, well, they're using Anthropic, they're using Claude to make their own AI offerings better. So this isn't a threat. This is more of like an acceleration of their own capabilities. What do you think of that?
Yeah, I mean, it's, at least to me, it's the first time very publicly that there is now a model of intelligence that is being gatekept for the developer, for the
Mm-hmm.
business. And that's a unique scenario because, there've always been models out there that they use internally. Is it one of those situations where it's too dangerous to let out in the wild? Is it in the scenario it's just too expensive to offer to millions of people and to be able to pay for the inference? That
Mm-hmm.
could also be one of those situations, but they're using it most definitely internally. It's just you only have so much access to so much compute. Where do you choose to serve that compute? That's gets into that business model of who is Anthropic as a company, and then what are their motives and incentives.
Yeah, so that brings me to the next question. I remember what it was is I've seen people look at Mythos and this release and say it's one of three things. Option column A is they're just being completely honest. This is a super powerful model. Now, I read too that this is like the most humane model. Like it was, I think they said it was aligned, like it was kind of ethical and moral and but also super powerful. And when something's super powerful, you want to move really slow. So that's column A. Column B was there are people who are saying, this is Anthropic marketing itself. They're going through rounds of fundraising. They're saying, hey, I've got this really powerful thing. I just can't release it yet. I saw on X a whole bunch of folks who are in like my line of work who are like, the next time someone asks why I haven't given a portfolio update, I'm just going to say, well, my next one is so powerful, it's going to break the internet. So I'm holding off. So column A is just, this is honestly what's happening. Column B is that this is simply a marketing ploy. And column C, you kind of touched on that the reason they're not releasing this to the public writ large is because they don't have enough capacity. And by that, I mean servers in former cow pastures in my home state of Wisconsin that now have data centers and they don't have enough of those that will match demand. And they don't want to have a product that releases that is super clunky because it can't match demand. I mean, look, we're releasing Stock Simplifier to our wait list in like 3 weeks. We want to make sure that it's not super clunky. I get that. So column A, honest. Column B, marketing. Column C, this is actually about capacity, why they're not releasing it. Which one do you think, or is it a mixture of those? How do you think about that?
I think it's all three. I
Okay.
don't have any reason to believe that it's not all three. Because if you just take a look at the facts, take all of the emotion out of it. They have an upcoming IPO. Most people believe this year, if not this year, the beginning of next year. So incoming next 12 months, you have an IPO.
Mm-hmm.
That means something.
Mm-hmm.
Second part is if you're on Claude Code or you're using it extensively, there are constant outages. So for a fact there are capacity limits. They cannot already deliver to everyone else that wants it. There's
So you've
more demand.
experienced that.
Oh, yeah, weekly.
Okay.
And it's terrible because you're in the middle of doing something and then you come to the realization that, oh my gosh, what I am doing is not capable without AI.
Mm-hmm.
Because once the AI goes down, you sit there and you're like, well, what do I do now?
Mm-hmm.
Because I just don't have the capacity. I don't have the ability to do that. And then I kind of take it as who is Anthropic as a company? They're a security first, safety first company. Now they do have a habit. You have to call a spade a spade. When they do release a lot of marketing, they do kind of lean towards that fearful side of marketing to
Hmm.
get people, they dramatize these things and they just lean on that fear a little bit because I think that's the culture that they're from because they're thinking risk and safety first. So
Well,
their
that's why they
imagination will
started,
just go
right?
there.
Because
Yeah.
this was started by former OpenAI employees, correct?
Yep.
So that is baked into their DNA because they didn't think the right security approaches were being taken. Is that
Yeah.
fair?
That's how I understand it.
Yeah, okay. All right. So let's pivot a little bit and just kind of talk about you are elbow deep in this stuff every day. So I'm really curious to see what you think about the future of SaaS with the understanding that you do not have a crystal ball. You cannot foresee the future. You also are the type of investor who's more focused on technical analysis than I am. But I just want to know about just kind of what you think of the companies, maybe even more than the stock. So I'll start with this question from Food Reviewer who says, do you know, or what do you know about the differences between these big cybersecurity companies like Palo Alto, CoreWeave? I don't know if CoreWeave I'd say is exactly a
I would have
cybersecurity
assumed
stock.
the person meant CrowdStrike.
CrowdStrike, yeah. CrowdStrike, Sentinel One, Fortinet, which might be least prone to disruption. I'm curious if you have any thoughts on that.
Yeah, I honestly, I don't really know because I think that, and also at the same time, ChatGPT just released their cyber version,
Hmm.
and they did an interesting thing just as a quick side where you have to actually upload your photo ID in order to use it.
Hmm.
They're taking the process of they're allowing certain people to use it more so than Anthropic is.
Hmm.
But they're saying, no, we're going to gatekeep it by you have to prove you are a person. And now we're only going to give it to people with credentials or whatever.
Interesting.
So these things are coming out, and you just assume everyone is going to have this capability in some period of time.
Hmm.
But cybersecurity specifically, I think it's no different than the way it is now. You just have a new tool that allows you to do more.
Okay.
And that just means that if you have a better run company and you're able to harness the powers of the LLMs,
Hmm.
then you're going to be able to do better defense and better fixing. And you're going to be able to hopefully do it faster than people are going to be able to exploit it.
Right.
And at the same time, there's one hard rule about cybersecurity. On the defense, you have to be right every time, and on the offense, you only have to be right once.
Yeah.
That's tough.
Yeah.
It's just a tough world.
Yep. So would it be fair to say that if the management of these companies are all making smart decisions, which is a big if, but if we assume that they're all making the right decisions, then the incumbents, I would assume, would have the advantage here because they have more data to make better decisions and roll these out. They have the distribution to more customers. Would that be fair if we're talking about cybersecurity?
I
Or
want
am
to
I
believe
oversimplifying?
I want to believe it. I just don't believe it.
Okay.
And it's because big ships turn slow.
Sure.
It's one of those situations. It's just in the world of AI, it's a speed game. If you listen to anything that Elon says, he's always talking about not just the bottleneck, he's talking about how fast can we pass it? How
Mhm.
fast can we build something? If you listen to Jensen, how fast they're redeveloping things. And
Mhm.
in software, you should be at, I don't know, I'm making up an arbitrary number of 10x, 100x the speed of actually moving tangible items in the real world
Sure.
because of these AI models. So if you are a large cybersecurity company, from my perspective, it's I want to invest in not just the fundamentals because it's something that's updated once every 4 months. And if we
Mhm.
go back to the original in the beginning of the conversation, 4 months ago, I used AI completely differently than I use it today. So
Okay.
one quarter, there's been a 180-degree change. So it's how fast can the team adapt? Do they have access to compute? That's a big one. And what type of management team is in there for vision? And are they cracking the whip? And are they moving with the speed that they need to move in?
All right. So I appreciate that. So kind of the overarching umbrella of what you're saying of maybe not just cybersecurity, but all tech companies is what you're fighting against is large ships turn slowly. That's the big thing. I just want to point out this is a topic that I'm actually going to be discussing tomorrow at a private webinar, but anyone can come to the webinar, and it's about mastering all the moats that are involved with this. So I put the link for that in the show notes. If you go to that and you register, you can attend. It's going to be at noon tomorrow. But let's move on then. So we talked about cybersecurity. Vishnup has a question here regarding ServiceNow. Jensen from NVIDIA is saying that it won't be affected by AI or won't be negatively affected by AI. He's wondering what your take is, if there's any SaaS that you or I are invested in. So I'm just curious. So a company like ServiceNow, I'm not sure how familiar you are with it, but what do you think about what they're going to do in the face of all this?
Yeah, I really go back and forth on this.
Okay.
As far as
Walk me
SaaS
through that
companies,
thinking.
yeah, as far as SaaS companies I'm invested in, I'll just get that part out of the way. It's Palantir, and I divested out of all other SaaS just because I don't know. But
Mm-hmm.
I look at it as one of two directions. Either we're about to enter the golden age of SaaS. And right
Mm-hmm.
now is just the transition freak out period of a new technology, which any new paradigm shifting technology that just happens throughout all of history. You can look at
Mm-hmm.
anything and it just always happens. So I think we could be, if you listen to people like Mark Andreessen, we're about to enter into this golden age, and there are going to be unlimited amounts of apps that are about to be built up.
Mm-hmm.
And then you go to the other level or the other range, and it's just, I think these LLMs are going to be able to do software so well that it's going to be one person that knows how to orchestrate things. And I think 2 weeks ago, as far as valuation goes, we had the first one person, $1 billion valuation company get talked about in the news. So that is also a thing. Are these models just going to eat SaaS? Maybe. Or you have other companies like Palantir. Now, Palantir, every time that the model gets smarter, Palantir's products get smarter because they're a harness, they're a structure, scaffolding that works on top of the model. A lot of people call them a wrapper, and they wrap around that model, and their job is to harness the power of the model
Mm-hmm.
and not get in the model's way. And I know, at least from my own building, it was when Opus changed from 4.6 to 4.7. I spent last weekend redoing all of my system structure because it had a different personality. And it didn't like negative talk, like never do this. And I had to reframe everything as positive talk. It seems to be a more emotional model that I don't know where that goes, but it's there.
Mm-hmm.
And just doing that, the performance I've seen in the past 2 days has been dramatic over the frustration level that I had on Friday. That was just, this is the worst model ever.
Okay.
It wasn't the worst model ever. I just didn't know how to use it. So that's why I think that harness level becomes so important for these SaaS companies. They got to find that balance. And the last part, to get off the monologue, it's going to come back to compute, because Anthropic can only do so much. They want a strong software ecosystem because Anthropic or any one of the hyperscalers, they can only offer so much compute. They need to offload some of that because the demand is so high. So it incentivizes SaaS.
So that's something I want to get to that. Just to answer the question that we had from Vishnu, there's some like ancillary, I wouldn't call them SaaS companies that I own, but they're involved in this. Like Amazon has AWS. Axon Enterprise has AI tools. Cloudflare and NVIDIA, they have a physical presence. But I guess your pure SaaS, I would say, I own Palantir, CrowdStrike, Shopify, and Duolingo. But kind of getting to your point. So this is, I think this is what's really hard for people to wrap their minds around. Like, I told the story in our learning community that I recently was driving north in Wisconsin, and I drove past the site for a new data center. And I was on the freeway and I was going 70 miles an hour. And it took me over 2 minutes to drive past where they're building this. So that tells me this is at least 2 miles long, this new data center. And we can't meet demand. Like, this whole idea of access to compute, it is hard to mentally compute, because the way that SaaS has worked in the past is you have code and you ship it and it costs nothing. So like TurboTax, for instance, Intuit, you update the code every year as the tax laws change, right? And so there's that upfront cost. But once I send that out to the rest of the world and they look at it, it might cost a couple cents, like literally cents, to serve that customer. But that's not the world we live in anymore, because it takes up so much energy and so many chips, and there's so much more demand for it, that this has become a big thing. And that's where we see this shift from focusing on the digital world to the physical world, like electricity generation, power, chips. Has that shifted where you look to invest? Like, let me rephrase that. Justin, if you've got software companies and you've got chip makers and you've got the people that make the picks and the shovels for chip makers like ASML, and you've got power companies, where do you see the demand like being the greatest out of all of where's the bottleneck? That's the question I was looking for. Where's the bottleneck?
It depends upon who you are.
Okay.
At mass scale, at the end of the day, not today, but at the end of the day, it's going to be energy. That's where it's going to be. That's the main bottleneck. It's the energy. Now, someone might say, oh, well, it's actually the transformers, because they got to get to the energy and people aren't making transformers fast enough. So it's that AI infrastructure where they need to be able to deliver the energy to the source. And then some people might say, well, actually, the bottleneck is going to be regulation, because you can have access to the energy, but you can't build it because you can't get the permits. I mean, it gets real complex real fast. So I kind of just take a step back, and it's who's most likely to gain? Where is the capital appreciation going to go to? Because, like you and I, we've talked about NVIDIA and the optionality. Are they actually going to be able to create something new that's going to add something meaningful when they already have the size that they have? That's going to be difficult. So you might want to look lower down the stack, but I think the biggest wins are going to be in the supply chain, because there's going to be a bottleneck across every plane. And to me, I think a lot of people do a disservice to AI by calling it AI, and people think of it as an app. AI is artificial intelligence. So I always ask the question, because I'm a market demand and supply guy. It's, have you ever gone to a job or tried to do something where in a little bit more intelligence would be to your disadvantage? Or do you wish you could apply a little bit more? Do you wish you could be just a little smarter because you could do it a little faster, a little bit more efficient? Where is the limit to demand for that?
Right.
I don't see one. So every company is going to this is where Jevons paradox comes in play, where as the price goes down, the demand is going to go up. And then it kind of gets to this point of, and this is a real point that a lot of these model makers are talking about. Do we want to deliver AI so someone can post a cat video on X or on Instagram or whatever, or do we want to solve cancer? Because
Mm-hmm.
we only have so much compute. And
Mm-hmm.
where are we going to divert that?
Mm-hmm.
To me, that says the bottleneck's the main one: energy and compute being chips and everything that goes into AI infrastructure.
So when you think about I think when we talk about chips, there's some obvious names there. There's the NVIDIAs, the AMDs, the Broadcoms, also the Taiwan semis and the Intels. There are the picks and shovels for that, like ASML. Just focused on the chips, are there any, because people love tickers, right? Like they love hearing tickers. These are not suggestions, but what other names come to mind
You
when
got
you're talking
Micron, you got
Micron? So
SanDisk,
mhm.
the memory names. That's the big immediate right now bottleneck is
Mhm.
memory, because it
So Micron,
basically,
SanDisk.
and HK Hynix,
Yeah, I
the
think that's right.
yeah, it's the other one. So it's basically it's those three. And then you got Samsung. I don't remember if you can really invest in Samsung or not, but
Mhm.
you have those memory makers, and now everybody's going towards the GPUs. Well, you got Google who's doing the TPUs, and same with Amazon. And then you have now what a lot of people are talking about is, well, GPUs are great for training. All of these chips, they're great for training,
And
but
GPUs are what
inference,
NVIDIA does.
yes.
Mhm.
And NVIDIA actually, I would say, saying they do GPUs would be a disservice. It would kind of be like Amazon sells books. They
Sure.
do, but they do a lot more type of
Mhm.
deal. But there's now with the inference level, you now got to look at CPUs because they just need access to computers. They just need processing power. And people are talking about CPUs. So
And what are the
I
big
think it's
names
all of
there?
it. I
If you don't know, that's okay, but I'm just,
Yeah, no,
again,
I wouldn't want to say it because there's so many moving pieces. I think all of the chip stack, though, it's finding out what happens if, well, first, can they meet the supply? If they can, or I'm sorry, can they meet the demand?
mhm,
And my first question is, if they can meet the demand, why isn't there more demand of theirs?
mhm.
Because everyone else has contracts that are out 3 years.
Yeah.
So that would be my first question, but maybe someone's going to figure it out so that there could be advantage to that. It's just whether or not that team can figure it out. It's kind of like AMD's been they've been the lower end compared to Nvidia, but maybe they figure some stuff out and maybe they have more supply than Nvidia has access to, and someone in need is just going to go through and buy all of it. So
Sure.
that could be advantageous to them.
Okay. So that's the chip side. Let's talk the energy side. Are there any names that stick out to you, whether it's an energy company or they focus on transformers or, again, picks and shovels of energy?
I think with the energy side, you got to look at regulations.
Uh-huh.
And it's what can you build? Like if you want a gas turbine power plant, they're sold out, I think, for the 3 or 4 years is
Mhm.
the delay on them. So how much more are they going to be able to communicate, or how much more are they actually going to be able to appreciate and value because of that situation? But as far as tickers go, you got GEV, uh,
GE Verona?
G Verona, you got Bloom Energy. A
Mhm.
lot of people are talking about nuclear because a lot of people are saying that, you know what, there might be a push for these data centers to save the grid, and we're going to do SMRs and we're going to do local supply nuclear,
A
and we're going to rush those through regulation because nuclear regulation, to my knowledge, is a little separate. It's its own little pocket, and maybe that can be spun up faster.
and
Uh,
SMRs are small modular reactors?
yes, more kind of like hyper micro reactors where I think that I think the amount of capital, and this goes to what we're seeing in Anthropic. Anthropic, as far as revenue generation from a startup, from a private company about to become public, to my knowledge, is the fastest growing company in history.
I look, when I look at the numbers and I see that they were doing like $9 billion in annual recurring revenue by the end, just 4 months ago, right? That's like half a pregnancy, basically. They were doing 9 billion. And now what are they at? 30 something?
30.
30. So they tripled in 4 months. And part of that is because I think they were from a business perspective, they were the smartest, because they said, we'll offer our stuff to people like Justin Lim and Brian Stoffel, but we're not building this for Justin Lim and Brian Stoffel. We're building this for Meta and we're building this for the huge enterprise customers, and that's where they're getting it from.
Yeah, they want the customers that are spending $1 million a month.
Right,
exactly. On tokens. Yeah.
Okay, so let's just think through this for a second. One of my favorite writers ever was Morgan Housel. And I don't know if he was parroting something that he heard someone else or this was an original idea. I don't think it matters, but he would go through the math of how the best solution to high oil prices is high oil prices. And you hear that the first time and you're like, wait, what? That doesn't make any sense. But then he says, think back to 2007. I don't know about you, Justin. I was in my 20s in 2007. I was a middle school teacher, and I remember I had to fill up my tank of gas, and it was really expensive. My car at that point in time got like 18 miles per gallon, and it cost $50 to fill it up, and it could only go so far. And he wrote this a number of years later, and he was like, well, think about it. An oil company has a lot of incentive to increase their production when gas is trading really, really high, when oil is trading really, really high. And so they go out and they do that. And then they reap the profits for a period of time. But because all those oil and gas companies do more of their prospecting and their extraction, you have a lot more oil, and oil production does not necessarily follow Javon's paradox. There is a limit at which, people aren't going to take 17 flights a month just if it's available. Like, they're just not going to do that. Right? So there's a limit. And so then supply outstrips demand, and then oil price falls. And I was like, oh, that makes a whole bunch of sense. I get it. I get how high oil prices are a great solution to high oil prices. But here's what I'm hearing from you, is that right now, it's like, it's not too much to believe that we wouldn't take 17 flights per month, because we're not taking 17 flights per month. Instead, what we're doing is Justin Lam is setting up his Claude cowork to run throughout the night as much as it can, so that when he wakes up in the morning, he has a whole bunch of new stuff that's ready for him to deploy. I can see how that at some point will probably reach some type of a limit, but it's much higher than 17 flights a month. So my question is supply ever going to meet demand?
I don't think so. And
let's just pause, because
I don't think so.
That's a big deal.
Yeah. I mean, it's just, think about this way. Like, I know you are slower to really bring in a bunch of AI.
Totally.
In the past year, do you use more or less than you did 12 months ago?
So 12 months ago, I bet I spent about 10 minutes a week using AI. And one of the first things I purposely don't look at screens for the first hour or two of my day. But the first thing I do when I look at a screen is actually not work related. I have a trainer, because I fed Gemini a book about training from someone I really respect. And I said, I want you to build my running program based on the principles in this book. And every day it asks me for like how much sleep I got, what my resting heart rate, and I go in and I do that. So that's the first. I spend 10 minutes per day just doing that. And I bet I spend at least 2 hours to 3 hours a day And that doesn't even count, if there's a night where I can't fall asleep, I'll just research a whole bunch of stuff using AI.
Yeah. And the way I look at it is right now, it's the most difficult to use. You actually
It'll
have
only
to
get easier.
understand how to use it. Where think about, think about cryptocurrencies before Coinbase. How many
Mhm.
people were buying crypto before Coinbase, where they had to set up cold storage, they had to do all this other stuff, and you just heard about the weird people doing it. Then Coinbase comes out and it makes it easy to use. All of these models, they're getting smarter, they're getting more relatable, they're starting to remember more. You're not having to train them as much, they just get stuff done. Now extrapolate that out next year, in 12 months
Mhm.
from now, and to me it's been an interesting environment, and this is something I just challenge people on, because I've always enjoyed the conversations with investors, because they want to get to the root of the truth, because they're putting their money where their mouth is. They
Mhm.
put their money behind their ideas, and that's a real quick truth test on whether or not you believe something.
Absolutely. It's a
And
high
investors,
value signal.
oh yeah, very much. And investors understand compounding. For whatever reason, investors don't understand the compounding of intelligence when it comes to AI, because it's been compounding. And if you look at it as an entity, whatever you want to call it, if you want to look at it as a kid or a person, okay. Now, when it first came out, it wasn't good at math, but it was really creative. Reminds me of a little kid. It's really creative. Kids say the darndest things. And
Mhm.
then as it grows up, it gets a little smarter and it can do some things. And then you reach puberty, it fights back a little bit, it gets stubborn, but it can do a lot more. And then it gets to graduate level, and then it gets to professional level. I feel like right now we're getting to that graduate level. It can do a lot of great things if you can spend the time with it. But once it gets to that professional level, where's that barrier to entry for anybody?
Right.
My test is how easy can my mom use it?
Mhm.
When that passes the test, when Apple incorporates it and Siri gets smart, when that stuff starts to happen, and you don't have to focus on harness, you don't have to focus on context or feeding it the book, it just knows it after the conversations, how much more are you going to use it?
Mhm.
And to me, I don't see a limit. In the agents, it really just expands it, because I don't want to run one agent, I want to run 10.
Right.
And if you look at it, this is what Jevons paradox. I don't know the numbers right now. I only know the numbers from last year, from what I believe them to be, is that in 12 months, Google went from using 1 trillion tokens to 10 trillion tokens in 12 months.
Hmm.
Now, think about that as 10x year over year. That growth rate, and I'll bet you they're going to 10x again at least, because more agents beget more agents, and you also get more intelligence. And right now it's just, you have elegant models and then you have brute force. So far, as long as scaling models maintain, the brute force is working. So it's always be on the lookout for the one that provides an elegant solution to have that deep seek moment. But right now it's just, the demand is so much because the world has so many problems.
Yeah, to just kind of give some examples, David said he did his initial federal and state income taxes using ChatGPT, and it reproduced a 1040 with the input data. Now I hope David still checked over everything to make sure it was okay. But that is something that I often say too, when people, because I do believe that there's a category of SaaS stocks that are really in trouble. Especially the collaboration tool stuff. Like, I just believe that especially for new customers, when they come along, they can be like, well, do we want to lock ourselves into Atlassian or Asana or Monday.com? Or do we just want to have this other one? And it might just be, do we just want to hire one person to build something with Claude? And this is the pushback I always get. They'd say, have you ever built anything from Claude? It's so clunky. And what I always say is, if you are valuing a company, over 50% of the value of that company is based on the discounted cash flows that are 10 or more years out. So you're counting on a disruptive AI technology not being able to replace this over the next 10 years. Like, to me, that's where the disconnect is between people that look at the SaaS numbers looking backwards and saying, this company is still doing really, really well. And the fact that these stocks have sold off so much because they're saying, well, the discounted cash flows don't make sense anymore because everything's being called into question. Which kind of brings us to the question of valuation. Are you someone that looks at valuation very much in your own kind of investing?
No, I
No.
I continue to learn from you guys about the valuation. It's I'm a business story and a price guy.
Okay. And that's fine. Everybody's got their own way. I mean, the valuation question to me is the toughest one. And it works both ways because you've got your Salesforce, your ServiceNow, your Adobes of the world that look awfully good looking back. And the question is, what will it be looking forward? And so that's one. But then on the other hand, in my opinion, you've got, I'll name the three that I've already mentioned publicly that I think could really benefit. You've got your Palantirs, your Cloudflares, your Axons that are showing revenue accelerating. And so they look really, really expensive. But if you accelerate, even if you just can accelerate the growth rate, go from 20 to 25% growth to 30% growth to 35% growth, well, that does a lot of really great things for a company's valuation, is knowing where are we on that curve. That can be
The
really tough to figure out.
the one area, the little mental math that I've done for it is that how much revenue per employee and what's the trend of that?
Mm-hmm,
Because if AI does stuff that it's supposed to do when you're using it properly,
mm-hmm,
each person should be contributing more.
mm-hmm,
So revenue per employee, I think it's not the best, but it's a quick metric that you could just say, are they making more money for the amount of people that they have, or are they making less money for the amount of people that they have? And if
mm-hmm,
AI is supposed to do what it's supposed to do, well, you should see more money per employee coming up. To me,
mm-hmm,
I feel like that it just works from my business model in my head.
mm-hmm.
And I think it's just a quick math thing that you can do pretty fast.
No, that makes perfect sense. So I'm kind of curious about a couple things. One is, with this transition to AI, so David says, Mark Benioff says that AI would not hurt Salesforce. To which I always have a couple questions. So you read about Agentforce growing really fast. Let me just ask, what do you think when you hear that? And then I have some specifics that I want to ask you about.
Oh, I like what David said. Yeah, I suppose he has to say that.
Right.
I mean, it's one of those things that my read on enterprise SaaS, because I think there's a massive difference between normal SaaS and enterprise SaaS. Those are two
Sure.
different beasts. If you're talking about Notion or you're talking about Salesforce, Notion is done by solopreneurs. You can just make your own. I've
Sure.
made my own. It's not that big of a deal. Enterprise, I think people forget the one major part about enterprise, and it's just liability protection.
Mm-hmm.
At the end of the day, as a business, if stuff goes wrong, you want to be able to point the finger and blame someone for own liability purposes. Where if something goes wrong and you're $100 billion business and you're down because someone just built something custom, well, you need it fixed and you almost need to have this layer of protection against yourself.
Mm-hmm.
That's a big benefit to enterprise SaaS. And at least right now, 5 or more years maybe it's as little as 2 years in the future. I don't know. I think there's going to be an inflection point, but for the foreseeable, at least 12 months, no matter how smart the models get, you're going to welcome liability risk by doing everything yourself unless you can do it better than everyone else. And there's only so much talent. So you either need the AI to step up or you need people to step up. It's kind of the way I kind of work with that.
Justin, were you a fan of The Matrix when it came out?
Oh, yes.
All right. So one thing that I remember about The Matrix is that, when Neo goes into the real world, all the humans are hooked up to the things. And I remember always thinking to myself, why would they do that? Why wouldn't they just kill the humans? And do you remember the reason why?
You got to give them purpose so that way they continue to produce the energy. Otherwise,
The energy. It was
yeah.
all about, like, the energy was the limiting factor in the Matrix. They still needed humans around because they harvested the energy from them. And it just makes me think more and more about how the energy truly is the limiting factor now. Like, that is the big thing. One comment we got here says that there is a lot of fear marketing going on to invoke legislation prohibiting data center builds, which is the biggest constraint. That's happening in the community that built that data center that I'm talking about. They actually just had a referendum where now all projects over a certain dollar amount, it's actually direct democracy. The trustees of the village or they don't get to vote on it. It's like a school referendum now. It has to go to the public writ large. What I hear the most is, and I'm kind of shifting here before we finish up, is that, from 2012 until 2024, digital, SaaS, that was the place to be. And I'm not saying that it won't be the place to be in the future. But what I am saying is that now, when you look at supply demand mismatch, and like if you're a business owner, you love when there's a supply demand mismatch because that means you have leverage. You can charge whatever price you want for something. If I'm the only person on the block that has food and everyone's hungry, I could charge $1 million. If I have the same amount of food and so does everybody else, I can not charge anything because I'm not going to sell anything. What is, like, of course, a company needs to have a moat in order to be able to do that. If they don't, then all bets are off the table. I mean, are there any names just in general in the energy that you get very excited about, or even ETFs in that area?
I've spent a lot of time. I haven't researched them, but I watch them on a consistent basis. I'm a big fan of Vistra, VST.
Mm-hmm.
Recently, it hasn't been going so well. GE Vernova, I mean, they've been just flying super hot. And then you got Bloom Energy, BE.
Mm-hmm.
I mean, there are a lot of energy providers. I'm hoping for nuclear and SMRs because I think that with the way that the new technology works, I think that they can actually be implemented faster if regulations allow them to. But that stuff just moves slow. And it's yeah, it's, to me, I wonder because also energy has a lot of other unknowns that I don't completely understand, and things are getting more efficient. It's just, are they using more power faster than they're getting more efficient?
But again, it doesn't even matter if they're more efficient if they generate more demand, right? It's that whole
Exactly,
Javon,
yeah.
like, so they get more efficient. Doesn't matter because every time they get more efficient, then demand doubles.
And I actually think I've heard this talked about, and I really believe, for everybody's knowledge, I am overly positive about people, but it's just a better worldview to have.
Mhm.
Is I think that I could see data centers supplementing the cost of energy to get by the permitting and get by the regulation to say,
Mhm.
okay, you don't want us to build here because it's going to raise the cost of energy for all of the citizens in the area.
Mhm.
Let us pay for it because they're going to be making so much more money because of the demand. They could actually supplement all of the energy demand for the local population because they're using an exorbitant amount.
So Microsoft comes in and they say, we're going to take off this huge area in your community. And we know that there are some hard feelings about that. So we're going to cut your energy bill in half as a way of saying thank you. And you're not even going to be. So let me just ask you this. When you look at nuclear, are there any ETFs or names? I know because aspects of this technology exist, right? Like my brother was the nuclear engineer on a submarine. Submarines run on nuclear technology. We know that this exists. It doesn't have to be like a 3 Mile Island type nuclear reactor. But are there any ETFs or names? Is this where Oklo plays? Are they
Yeah,
in
you
the
got Oklo.
OKLO ticker?
Yes. I'm trying to remember. There's a uranium ETF.
Mm-hmm.
And I felt like that was one of the easy ways to. I'm trying to remember what it was, and I'm not. Anyway, that one had a lot of the Oklos and those types. I think Vistra was a part of it, but I think that energy could be one of those situations that winds up being really good. And let's not forget about solar. One of the
Mm-hmm.
benefits of solar is that there's less regulation.
Mm-hmm.
But in order for solar to work in the terrestrial, and we could even go into that, the data centers in space really
Right.
fast, is in order for it to work on the planet, you then also need batteries. So you need the storage aspect.
Mm-hmm.
And then when you got the batteries, you're talking about all different types. Now you can go the Tesla route, you can go the EOSE, is a ticker for batteries. I would say, now it's funny because my business, it's global, but when it comes to I think that people should be aware of the national security risks.
Mm-hmm.
And I think as investors, you should also be looking at what companies are local American companies that are building it locally,
Mm-hmm.
because I could see that becoming one of those national security situations where
Mm-hmm.
they're going to say, we don't want an outside national company building the backbone energy stuff into these data centers that are actually powering the things in our government and our intelligence.
Yep.
That's where, as someone from Portland having Intel in the backyard, I'm happy that Intel is starting to get a little bit more momentum because they were downhill for so long. But it feels like life is being brought back into them. But they're a American foundry. There aren't any others. So it's kind of,
Yeah.
it's very complex. It's the
Well,
moment you dive into it, it's just like, ow, this hurts. And that's, AI has been great for providing clarity because you can create the mind maps, you can create the charts, you can see which companies are in which areas, and then which company, if you do get a 10, 20, 50% appreciation, which one benefits the most from it.
right. And I will say again, so the way that I think about it, and this is where I'm gonna to wrap it up because we are at the top of the hour, and this has been fascinating. I told Justin beforehand, I hope people have questions, but this is a discussion that I want to have anyway, and we're going to see each other in person in about a week, so we don't have to have this exact conversation now that we got to have it. But the mental model that I have for everything that we've talked about over the past hour is, if you look at history, you see how after World War II, there was this industrial revolution that really took over and changed kind of the landscape. And then, whether it's right or wrong, I always think of the Clinton presidency years of the 90s is when the internet became the thing. And it changed the landscape of both business and everyday life. It did. Like, I love that commercial, or not that commercial, that clip from the Today Show where Bryant Gumbel is reading off a .com. What does that mean? Like,
That email clip, I
right,
love that one.
exactly.
I love it.
Is that the at sign? I don't know what that is. So like that started in the 90s and it really did go through until the 2020s, until our post COVID era. And right now we're in the beginning of this third one. And the big question, this is me pivoting to the pitch, but I think The big question is, you can find areas that are going to grow big, like energy. But if the companies in energy don't have a moat, it doesn't matter. I'll say that again. If a company doesn't have a moat, it doesn't matter, because, let's say anyone can go build a small modular reactor. Well, then that's great for humanity and terrible for investors, right? Think about the large screen TVs. They are so much cheaper than they were 10 years ago. Great for humanity or people who want TVs. Terrible for investors. So tomorrow we're going to have a webinar that's on this topic, and we're going to talk about how AI is changing moats as well. So if you want to register for that, I just put it in the comment section again, and it's absolutely free. You just need to click so you can have access to where it is. But the big takeaway I'm going to take from this, Justin, is that I'm going to start looking into energy ETFs and doing the research that would give me the right to think that I might be able to pick individual companies that are well positioned. That's my big takeaway from this, which is a huge divergence from where I would have been a year ago, because I don't own any energy companies.
Well, and I'll just say, and this was something that we didn't even get to, but we also haven't even touched on robotics. Because all of this intelligence that we're talking about, and this is, I think it's a good mental thought just to have and to keep in someone's mind, is we've seen all of these increases, all of these needs for data centers and everything else. We saw ChatGPT drop the Sora model. Why'd they do that? Video is token intensive. We're running out of compute for text. Imagine what happens when it's now to video and it's also on robotics, and the robotics are processing video all the time in order to interact with the world. That level of addition is way more than just a few more agents doing more web searches. That goes exponential from where we already are. And I don't know how many years out we are from it, but you can see it accelerating with all of the investors talking about robotics. And 26 is probably the year of the agent. 27, who knows? Maybe it's robotics, maybe it's 28. But this keeps on going. You need more compute, you need more energy. And I think for the robotics, you're also going to need a lot more batteries.
Yep. I will throw one other thing out there. I think space is a big thing, because I think that it's going to be part of the solution to all the problems that I know people joke about the data centers in space, and I think it is a joke when you talk about it happening in 2026 or even 2027. But I don't know. Like, necessity is the mother of, like, it is. We cannot meet demand, and
You want to know the
financial
fastest
incentives are
way?
going to be there.
You want to know the fastest way to accelerate data centers in space?
How's that?
You tell people you can't build data centers on the planet.
That's true.
You put regulations and permitting, and you make it illegal to build a data center in a state. That's the fastest way data centers are going to go up in space, because it's going to be economically more viable to do it
Right.
up there, because
Right.
there aren't the regulations that are down here.
Right. Yep.
And energy is very cheap up there. It's just the energy to get to there.
Sunlight
That's the
24/7.
expensive.
Pretty great.
Yeah. Mm-hmm.
All right. We kept people 10 minutes past the hour. Justin, this was fantastic. It was phenomenal. I hope people got a lot out of it. Just want to let people know, as note keeping, next week, there will be no Tuesday session, because all of us that are in long-term mindset, Justin, Mr. Feroldi, all of us, we are meeting for our biannual get together. But we will be back after that, diving into stocks that we own. And I believe by then we will be using the new stock simplifier that Mr. Lamb constructed, which I am very excited to show people. Justin, thank you so much for joining today.
Oh, thank you for the opportunity. This was fun. I hope it was beneficial to people.
All right. Well, thank you everyone who joined us. We will see y'all in 2 weeks when we come back with our normal programming. Until then, Have a great time.